Bitcoin is suspended in anticipation of the development of the situation with Iran. Treasury yields can stop the war or turn the entire crypto market in the near future. And banking kids are buying Bitcoin in huge quantities. So, in general, we have something to discuss. But before we move on to the main news of the day, let's look at the prices. After yesterday's bounce, Bitcoin is hanging in anticipation of further development, trading between $17,000 and $71,500. Whether it's worth waiting for a breakout and which way, we will figure it out in just a minute. And Ethereum is also currently on hold with the price of $2,162 and has not yet exited this corridor. Bitcoin holds above $70,000, but future direction hinges on Iran-US talks. So Bitcoin gained a foothold above $70,000 and even rose to $71,000, and retaining most of the growth after the announcement of 5-day pause and strikes. And altcoins have tightened up as well. Ethereum, Solana, and Dogecoin have gained about 5% each. The shares of miners also flew up. Hot 8 jumped by 11% and the rest by 6 to 7%. And SP 500 and Nasdaq stocks index closed with an increase of 1.2%. Oil calmed down, the markets has hailed, but as always, there is a nuance. And also, Wintermute traders warn that further dynamics depend entirely on what happens in the next 5 days. If negotiations, real or imagined, lead to stabilization of oil prices and shipping through Strait of Hormuz, inflationary risks will decrease, and the Bitcoin may test the range of $74,000 to $76,000 again, and from there fly to $82,000. If the truth does not happen and strikes resume, oil will surge again, inflation will increase, and Bitcoin may return to the $65,000 area. And now the market is frozen in anticipation, and I will continue to study and cover all the news related to this situation during this day so as not to miss the next big move. And it's a great time, by the way, to remind you that if you want to stay informed about all the events, you should definitely subscribe to my daily news. Here's how Treasuries could shape Trump-Iran war and Bitcoin moves. In short, analysis have found that the real limit for escalation in the Middle East is not Iran's patience, but the nerves of the American bond market. While Trump and Iran are trading blows and denials, the yield on 10-year US government bonds, which is essentially interest on government debt, has soared to 4.41%. And if it continues to grow, Trump will have to choose whether to continue the war or not to bankrupt his own country. Experts say that as soon as the yields reach 4.5 to 4.6%, this is a psychological red line. And if it jumps to 5%, a mini crisis in the financial markets will begin, and the Fed will have to urgently save everyone with money. And we already have an example of that. When yields went up last year due to tariffs, Trump quickly backed down and announced the pause. So what will happen to Bitcoin in this situation? At first, it is likely to fall slightly along with other risky assets because this is a standard initial reaction to a crisis, But if the Fed starts printing loot and pouring liquidity into the system, for Bitcoin, it's like a red rag for a bull. It will just go up immediately. Digital asset flow slows as Fed's hawkish pause dampens the sentiment. So CoinShares has released another weekly report, and there is such a picture here. Investors in crypto funds have sharply slowed down. Last week, the inflow amounted to only $230 million. And it sounds good, right? But this is a serious slowdown compared to the previous weeks. And the main culprit here is the Fed. In the first half of the week, everything was fine and 635 million came in, but after the Fed left the rate at place, which is 3.5 to 3.75%, doing so in a really hawkish manner, investors withdrew $405 million, and although the outflow slowed down by Friday, the sentiment remained here. So CoinShares analysis believe that this is the case and not the protracted conflict with Iran. By geography, America is still in the tops with 153 million in inflows. Germany, 30 million, and Switzerland with $27 million are also not far behind. In short, the market is frozen in anticipation, as I said before, and the main intrigue is what will happen when the Fed finally decides to lower the rates. Oil and silver trading is way more popular than XRP and Solana on Hyperliquid. So on the Hyperliquid decentralized exchange, oil and silver took over Solana and XRP in terms of trading volumes. Oil and silver traded for $900 million per day, with WTI and Brent oil $500 million, and silver $412 million. For comparison, Solana $176 and XRP $31 million. And this is despite the fact that the capitalization of Solana and XRP is estimated at tens of billions of dollars. In general, this is expected given that now the charts of traditional stable assets are more similar to those of meme coins, and traders have jumped into decentralized exchanging, operating 24/7, especially on the weekends when traditional exchanges are closed. Strategy tops up capital raising plans, bringing potential Bitcoin buying power back to $42 billion. So Michael Saylor, this guy doesn't stop. Strategy has announced a new $42 billion capital raising platform. The money will be raised through the sales of ordinary shares and two types of preferred shares. And last week, the company has already bought 1,031 Bitcoin, and there are now 762,099 Bitcoins in the balance. The average purchase price, though, is about $76,000, and the current exchange rate is $71,300. And that basically means Saylor continues to average in the negative. But in fact, given that Strategy's shares are trading at 70% below their historical highs, Saylor's skill at finding capital to buy Bitcoin is admirable, to say the least. Just for your understanding, if the price jumps to historical maximum now, the company's profit will be $38 billion. Swiss private bank dynasty splits over crypto strategy clash. A serious family scandal broke out in Switzerland with the crypt in the title role. The Swiss group dynasty of private bankers has split due to disputes over digital assets. Mark Sis, the founder's son, left the family conglomerate along with his business partner after the board of directors blocked plans to include the Future Holdings crypto company in the Sis capital division. The father apparently was afraid of the risks, and the son was too inspired by Michael Saylor. Now Mark Sis and Richard Byworth are preparing the double listing of Future Holdings in Sweden and Switzerland, promising to make the largest Bitcoin platform in a whole Europe. The plans are to accumulate 3,500 Bitcoins. In addition, they will create an independent management company that will compete with the Sis capital. And interestingly enough, under Mark's control, assets under management of Sis Capital have grown to $2.5 billion, and Sis Group itself manages $32 billion. In general, they have an interesting Game of Thrones here, and let's see what's gonna happen. Telegram turns profitable and fully repays bonds as investor demand surges. Pavel Durov has closed all debts. Telegram has fully repaid the first issue of convertible bonds issued in March 2021 for $1 billion at 7% per annum. And in May of the same year, another $750 million was added on the same terms. Investors could convert the bonds into Telegram shares at a 10% discount, subject to an IPO was promised by the end of 2023, but then postponed. And Durov noted that the monetization strategy adapted 5 years ago allowed the messenger to turn a profit as early as 2024, and the new bond issue was oversubscribed. In general, there is nothing unexpected here because Telegram is really on the rise, and by the way, I'm thinking about starting a Telegram news channel to cover the most important events even faster. So what do you think? Tell me your opinion in the comment section down below. But that's all the news for today, and I will see you tomorrow. Bye!